time we answer a question on your stock in a little segment we like to call Your Stock, Our Take. Buy, sell, or hold.
Okay, so yes, this Your Stock, Our Take came in from Peter, and he says, can you look at Drone Delivery Canada? Speculative for sure, but some serious agreements with Air Canada and other companies for commercial deliveries. So Drone Delivery Canada Corp, FLT, on the TSX Venture, currently trading at a price of about 28 cents and has a market cap of about $63 million. So the company designs, develops, and implements a commercial drone-based logistics platform in Canada and internationally. The company's logistics infrastructure solution is an integrated turnkey logistics platform, which include industrial-grade drones, automated drone spot depots, automated battery management systems, a detect and avoid radar system, as well as their proprietary flight software. So some key points here. The stock is down about 64% year to date and about 90% from its 2021 highs. The company does have a couple of drones which are operational and is currently developing additional drones, including the Condor, which is a two-stroke gasoline helicopter, which has a maximum payload of about 180 kilograms and a range of 200 kilometers. And the company now anticipates completing endurance testing in 2023 in Foremost, Alberta for that Condor drone. And the company is also working on the Canary, which is the next generation of its Sparrow drone. So going to slide 2 here. Drone Delivery Canada did sign some interesting contracts in 2022, but I will note that none of the contracts have publicly listed dollar values on them. So in November of 2022, its Care by Air project initiative, through the assistance of its sales agent Air Canada with Halton Healthcare Services and DSV Air and Sea. So this revenue generating pilot project will be operational for a 6-month term and will be used to transport a wide variety of healthcare goods by cargo drones for the benefit of fast and efficient delivery to Oakville Trafalgar Memorial Hospital. In August of 2022, it announced the successful approval and implementation of a dangerous goods transportation for UBC Faculty of Medicine's Remote Communities Drone Transport Initiative. So essentially, they'll be utilizing the company's drone logistics solution to enable a defined two-way delivery flight route to transport a variety of cargo to central northern BC. And this contract is expected to last about a year. And in June of 2022, they had a deal with Edmonton International Airport, and the revenue generated from this project will be operational for about 12 months. And then as well, just lastly here, in April of 2022, the company entered into a collaboration with Bell Mobility Inc. to work together for a 3-year term in respect of development of certain products and services in order to improve technology as it relates to 5G network and multi-access edge computing for autonomous drone performance. So Drone Delivery Canada is charging Bell a little bit for engineering services essentially here. So those are the contracts. Now let's look at the actual financials here. So the company did just report its fiscal Q3 2022 results on November 15th of 2022, and revenue was up to $247,000. But keep in mind, this was from a very small base, and the increase in revenue was due to the inclusion of the UBC as well as the Edmonton International Airport contracts that went into operation. Plus, the company recorded some revenue from the provision of engineering services to Bell Mobility. Looking at the net loss, they posted a loss of $3.8 million, up from a loss of $3.3 million in Q3 of 2021. And cash flow used in operations was about $2.6 million, up from a loss of about $2 million in the prior year period. And the balance sheet did have a net cash position of about $18.2 million. But I will note the company's share count is getting up there, though, now with about 224 million shares outstanding. So like the company that Ryan was talking about, this big cash position isn't from, cash flow. Essentially, this is from the company issuing shares and raising money that way. And just here on the expected expenditures, I just wanted to show essentially that the company is developing and putting a lot of money into R&D right now. So you can see just for commercial testing and product development and commercialization, they anticipated in 2022 to have, or they actually spent about over $3.5 million. So when we're seeing a company pull in only about $250,000 in revenue a quarter, that is a little bit of a concern considering this company is spending a lot. So to conclude, Drone Delivery Canada is an interesting company, and one day it could be the leading provider of delivery drones in Canada. But I agree with Peter, it remains speculative given its very small base of revenue and continual losses, which have amounted to over $28.9 million over the last 8 quarters. The company does have some good partners, including Air Canada, UBC, and Bell, but these partnerships haven't really translated into meaningful revenue. And though the business has a cash-rich balance sheet, it will have to continue to invest heavily in R&D to advance its drone technologies. And if it doesn't achieve profitability soon, it will likely have to further dilute shareholders. Again, it's an interesting company, but until it can start to produce meaningful revenue and get closer to net profit and positive cash flow, we remain on the sidelines.
I'm going to push back on that statement. I'm going to say it's not an interesting company. I'm going to say it's an interesting story, right? It's an interesting industry. And I think that there's a million things that you could do and make money with on drones. But this company has spent $28 million into developing their technology, and they still virtually have no revenue. I mean, I consider $250,000 a quarter to virtually be no revenue, right? And so that's a problem. I don't know exactly how they're going about. Maybe they're trying to, they have too many pots on the stove at once. But I would say with that amount of investment, $28 million, they should have been able to develop something that they're actually selling right now. Get some revenue in the door, even if there's not profit yet. Get some revenue in the door. And then you can start to develop some other things, right? So that'd be a big concern for me, right? I don't like these companies that they go public in the market before they really have anything to even sell or commercialize. Like that's, try and raise that money privately. And then by the time you go public, you should have something, right? At least some revenue, if not profit.
Wow. A done. Shots fired at BHAB. Wow.
No,
just kidding. No, I agree.
No,
it is just an idea. It's not a business.
Than anything.
No,
yeah.
no.
Yeah,
I'm joking.
Because if you talk to me about drones, like the whole idea of drones, drone technology, some of the potential applications, commercialization, I think that there's a ton of potential there. And that's what makes it concerning that the company's invested $28 million of shareholder money into its business, and they still only have like less than 300,000 of revenue in a quarter. That's a big concern.
I mean, they have minimal revenues. It's a concept right now, even though they call themselves a company. It's just a concept. I mean, they have an accumulated deficit of like 86 million too.
So it's like, okay, so I don't have they. It's 86 million they've put. That might not be all them. Right? Maybe there is a reverse takeover in there or something. I don't know. But if it's 86 million that they've invested in that technology, so this is money that's been raised from investors because they're not making money themselves. And they don't barely have revenue. I mean, that's a major issue, right?
Yeah, and there's a ton of shares out, and like the next raise would likely have to come with probably a consolidation of the shares, and it's a minimum amount of revenue.
Yeah. Rock bottom value. Well, I mean, there's no valuation. Rock bottom share price.
Yeah, right? The valuation might be high.
I mean, it is awful.
I mean, no, I know.
That's the thing. The valuation.
It's
hilarious. Expensive. Yeah.
But yeah, like I mean, again, interesting industry, interesting.
Oh yeah.
When you look into the company, but
love the industry.
There's also a hell of a lot of aerospace companies in this sector that have a lot more capital behind them too. So
sure, I think, and that's why if you're a smaller company, you focus on something very narrow, very niche, that you do your research, there's going to be customers out there. You build something that you can sell, 5-10 million, you get a couple good salespeople, and you start validating your business by getting some customers, right? Like that's how you enter a market like that, in my opinion. For the opinion of somebody who's never done it myself, but I research companies for a living, and this is what I see time and time again, right? I know what the success factors are and the patterns are of successful businesses, right? And I know what the patterns are of businesses that just end up raising a lot of money and never actually achieving their objective of having this big business with a lot of revenue, right? So it's
yeah, I mean, the market is speaking too, like, and it wants profitability. If you look at January 15th, 2018, when the company, the first sign I see it listing publicly is $1.79, and it's 28.5 cents right now. So, I mean, the market over time, like there was some hype around the business. It jutted up to $2 in February 2021 when the markets were crazy. But like, the market needs to see cash flow at some point. I mean, in this case, some kind of significant revenue base. And if you don't see
the
that,
market's not going to see that anytime soon from the looks of it. No. Maybe I'm wrong. Maybe they can prove me wrong. I hope they do. Yeah. But
but at this point, based on the underlying financials, there's not anything there for us to be able to invest in at this stage.
Yeah.